How? For most of the last 30 years, Japan kept its interest rates at essentially zero, near nothing. And what happened when money is essentially free to borrow is exactly what you would expect. Institutions around the world, hedge funds, banks, investment firms, borrowed massive amounts of yen at almost no cost and then took that money and invested it in places where returns were higher, which is smart. So they invested it in US treasuries paying 4 or 5%, global equities, foreign bonds, real estate. You borrow cheap in one currency and you invest it in higher yielding assets in another currency. And then what you do is pocket the difference. Now, that trade is called the carry trade, and Japan became the source of the single largest carry trade in modern financial history. So we're talking about trillions of dollars in borrowed yen sitting in assets all over the world. Now, here's what's happening right now that is changing everything about this. Japan is raising interest rates. For the first time in decades, the Bank of Japan is moving rates higher. Japanese bond yields just hit a 20-year high. And when interest rates rise in Japan, the cost of borrowing yen goes up, which means the carry trade that has been profitable for years start losing its advantage. So that means the math is not mathing anymore. And when the math stops working, the institutions that built positions on that math have to unwind them. Here is what the unwinding looks like in practice. An institution that borrowed yen, converted it to dollars, and bought US treasuries now has to sell those treasuries, convert the dollar back to yen, and repay the original loan. Every institution that did this trade in the same direction now needs to do the reverse at the same time. So they need to sell foreign assets, buy yen, and repay the debt all at once, all moving in the same direction, all at the same time. Now, that creates an enormous cross-border capital movement that has to happen fast. And here's where the traditional banking system reveals its fundamental problem. Right now, when a large institution needs to move significant capital across borders quickly, the system it uses requires pre-funded accounts. So before you can send value from one currency to another, your institution needs to have already parked money in that destination currency, sitting idle in an account waiting to be used. Banks maintain these accounts called Nostro and Vostro accounts in dozens of countries all at the same time. So you have trillions of dollars sitting in accounts all over the world doing nothing, just waiting, just in case.